Investing for teenagers is a crucial topic that can set the foundation for a secure financial future. In today's fast-paced world, financial literacy is more important than ever, and understanding how to manage money wisely can empower young individuals to make informed decisions. In this video, we'll explore various investment options available to teenagers, from stocks and bonds to mutual funds and savings accounts. You'll learn effective strategies to grow your wealth over time, even with a small initial investment. By starting early, teenagers can take advantage of compound interest and develop good financial habits that will benefit them for years to come. Join us as we dive into the exciting world of investing and discover how you can take control of your financial destiny. Understanding the basics of investing. Before diving into the world of investing, it's essential for teenagers to grasp some fundamental concepts. First, let's define key terms. Stocks represent ownership in a company. Bonds are loans made to corporations or governments, and mutual funds pool money from multiple investors to buy a diversified portfolio of stocks and bonds. Understanding these terms is the first step toward making informed decisions. Next, it's crucial to recognize the concept of risk versus reward. Higher potential returns often come with increased risk, so balancing these factors is key. Lastly, setting clear financial goals helps guide investment choices and keeps you focused on your long-term objectives. By mastering these basics, teenagers can confidently embark on their investment journey. Types of investments for teenagers. When it comes to investing, teenagers have several options to consider. Stocks are a popular choice, allowing young investors to own a piece of a company and potentially benefit from its growth. Exchange-traded funds, ETFs, offer a way to invest in a collection of stocks or bonds, providing instant diversification. Savings accounts, while not technically an investment, are a safe place to grow money with interest. Starting with a custodial account can be beneficial, as it allows parents to manage investments on behalf of their teens while teaching them about financial responsibility. Diversification is crucial in any investment portfolio. Spreading investments across different asset types can help reduce risk and improve potential returns. By exploring these options, teenagers can build a solid foundation for their financial future. How to start investing. Starting your investment journey as a teenager can be exciting and empowering. The first step is to open a brokerage account, which often requires parental guidance for those under 18. Parents can help you navigate the process and choose a reputable brokerage that suits your needs. It's wise to start with small amounts of money. This allows you to build confidence without taking on too much risk. As you grow more comfortable, you can gradually increase your investments. Researching and selecting investments is crucial. Take the time to learn about different companies, industries, and market trends. Utilize online resources, financial news, and investment apps to gather information. By taking these steps, you'll be well on your way to becoming a savvy young investor. The power of compound interest. Compound interest is the process where the interest earned on an investment is reinvested, allowing your money to grow exponentially over time. This concept is significant in investing because it means that not only do you earn interest on your initial investment, but you also earn interest on the interest itself. For example, if you invest $1,000 at an annual interest rate of 5%, after 10 years, you could have around $1,628. If you start investing at a young age, even small contributions can lead to substantial growth. Imagine investing just $100 a month. Over 30 years, that could grow into tens of thousands of dollars. By thinking long-term and harnessing the power of compound interest, you can significantly enhance your financial future. As a young investor, it's essential to be aware of common pitfalls that can derail your financial journey. One major mistake is emotional investing. Letting fear or excitement drive your decisions can lead to poor choices, especially during market fluctuations. Similarly, trying to time the market, buying and selling based on short-term trends, often results in losses rather than gains. Another critical error is investing without proper research. Understanding what you're investing in is vital for making informed decisions. Always take the time to analyze companies and market conditions before committing your money. Lastly, remember that investing is a marathon, not a sprint. Cultivating patience and maintaining a long-term perspective can help you weather market ups and downs, ultimately leading to greater success in your investment journey. Resources for young investors. For teenagers eager to dive into investing, there are numerous resources available to enhance their knowledge and skills. Educational websites like Investopedia and Khan Academy offer comprehensive articles and videos that explain investing concepts in an easy-to-understand manner. Additionally, apps like Robinhood and Acorns provide user-friendly platforms for young investors to start trading and saving. For those who prefer reading, books such as The Intelligent Investor by Benjamin Graham and Rich Dad, Poor Dad for Teens by Robert Kiyosaki are excellent beginner-friendly options. Joining investment clubs or online communities, such as those on Reddit or Facebook, can also provide valuable insights and support from peers. By utilizing these tools, young investors can build a solid foundation for their financial future. We've explored the essential aspects of investing for teenagers, emphasizing the importance of starting early to build a secure financial future. By understanding key concepts like stocks, bonds, and the power of compound interest, young investors can make informed decisions that lead to greater returns over time. We've also discussed the significance of avoiding common mistakes and utilizing valuable resources to enhance your investing journey. Now it's time for you to take actionable steps towards investing, whether it's opening a brokerage account or researching potential investments. If you found this content helpful, please subscribe, like, and share this video with friends who might also benefit. Together, let's empower the next generation of investors to take control of their financial destinies.